Hello and welcome to CFO.com. My name is Amol Dete. And in this special series, Future of Compliance, brought to you by Clear from the makers of ClearTax, I have with me Archit Gupta, founder and CEO of ClearTax. Archit, glad to have you.
Thank you, Amol. Thank you for having me on the show.
So to begin with, Archit, future of compliance is going to be a very, very important area because compliance is always an integral and a critical part for the financial executives, for the India Inc. and everybody as such, right? And in fact, there are a lot of regulatory aspects. Whole industry is also trying to see how can compliance be regulated and automated so that the burden will be reduced. And that's why in this particular series of future of compliance, we'll try to take your perspective. So to begin with, my first question to you, Archit, is what does compliance mean for CFOs now and how will it shape up in the future going ahead?
Right. Amol, that's a great question. And when you step back and look at it, right, India has gone through massive transformations, right? And that is where the landscape of compliance is also changing, right? First of all, we as a country have decided that everything will be digital, right? The first things first, we decided with the national tax reform in GST, all indirect taxes will get into one nation, one tax, but more importantly, completely digital reporting of everything and completely end-to-end digital. And as you can see with faceless assessments, bunch of other things, the country is moving towards digital pathway on that. Now, with the introduction of e-invoicing, e-way bills, that was the second step in terms of digitizing every single invoice, the interaction with even your vendors, your suppliers, your customers is becoming digital in nature, right? And that is also driven by two elements, right? One, you are asking the actual invoices, everything getting digital, the movement of goods getting digital, the reporting of taxes getting digital, and the India as a country is saying two benefits, right? One, you have a digital trail, so that can lead to a lot of use cases. The second part is you have the expectation of automation, the expectation of everything digitally squaring off, and proper tax collection which can happen, or proper compliances which can happen. And the third part is using this digital trail, maybe more use cases in financing and fintech kind of use cases open up, which is happening right now in India as we speak. So this is what is happening with compliance. So the interesting part is when which you reference as we started the work as a CFO now. Obviously you can't get away from compliances. You have to get it done in your org if you want to scale up your business. Second part, as you're thinking about your business and compliances, you're better off automating everything now, given the digital footprint and nature of where India is headed. So the future of compliances is digital, automated, and completely paperless. And that is where everybody's headed. And that is where India Inc. is headed. And businesses which are adopting and playing with it, and especially COVID has shown the way. Those businesses are giving time back to their teams. Their teams are busy, are instead of doing busy work of closing the compliances, etc., are able to leverage technology to save time, get peace of mind, and multiple other benefits with technology.
Noted your points. Archit, let me move ahead and ask you another question. Though you partly mentioned, but let me be very specific. Uh, and my next question is about that. So my question is now, how can technology help CFOs drive growth while maximizing working capital and reducing risk?
Absolutely, Amol. So the role of a CFO is continuously evolving, and especially with this fast-paced change in our economy, the role of CFO is completely changing and very fast, right? A few things are happening. One, businesses are rapidly evolving to deal with multiple changes which are happening in the ecosystem. One could be new business opportunities, M&A, what have you. The other could be this complete digitization which COVID has triggered, where every business is now thinking about their customers and interacting with customers digitally. The third thing is more and more investment into IT systems, which is giving CFOs clarity on data analytics, application of technology in decision making. See, the number one thing the CFO brings is co-piloting the ship with the CEO and helping the board and the CEO make decisions and take forward looking bets and course correct, right? And for that, the telemetry in the business is the most important thing, right? With the investment, and as we've been talking to many CFOs, the investment is radically on data visibility, the right dashboarding, decision making, predictive analytics which surround the business, using data lakes and what have you for decisioning. That is one element. That leads to the CFO being able to predict risk. CFO being able to predict growth opportunities, predict like areas where working capital could be needed more, less, and what have you. So these are examples where we have seen a lot of application of technology. The second one, which has come out very interestingly, which we observe, is the digitization which is being driven by the government itself, right? Like there are three, four folds of digitization which India is driving, right? One is on payments, right? Digital payments is here and accelerating in our country, right? Digital payments also creates like digital trail, which leads to newer and alternative credit models, which fintechs and banks are now leveraging to provide working capital at better rates or without collateral and what have you. The other thing which is getting digital is these electronic invoices, e-way bills, GST, taxes, all of this, right? So now more and more things are coming our way, right? Bill factoring, invoice discounting, that is coming our way, which can really lead to very, very different working capital, revenue based financing, and some of these new things which are emerging, which are completely different from how business was being done like even 3 years ago, 2 years ago. So I think there's a moment of massive transformation where technology is can help the CFOs predict risk, guide for growth, and then optimize working capital with alternate forms of credit or alternate forms of payments and collections and what have you, which can optimize the cycles in which these businesses deal with. So these are the things we are seeing in technology side.
Valid points. Archit, I think you mentioned, optimization and very important points. But, when it comes to CFOs, I think what is very, very important for everybody is, there is no scope for error. You cannot make any error. And, while they're adopting technology, trying to put it on automation, the most important thing which they have to ensure is, there should not be error. So could you please explain, since the expectations for specifically that there should be no error, how should CFOs ensure optimum and maximum utilization of the right technology?
Right. And Amol, that's a question which comes up like a lot, right? How do you deal with risk and how do you deal with errors, right? The first things are, and what we have learned as a framework is, first is like if you're entering a new space or you're trying a set of new technologies, right? The first is to articulate the risk and the downside. What is the worst that can happen? The second one is running great proof of concepts and pilots to first build comfort with new technology, get your organization acclimatized to this change, like in terms of, so proof of concepts are great, pilots are great to build comfort with technology. Third, I mean, obviously, if it's a battle tested technology, either used domestically or globally, then there are reference points within the industry or others which can help build trust. That is on the first side. So the risk is actually not just the platform risk. The second part is adoption risk, in terms of making sure the technology goes live. So a lot of times technologies, the go live and the process and the journey of adopting and taking the org through like a technology transformation sometimes fails because there is not enough mandate or meeting of the minds within the C-suite. And the third thing is, after the technology is deployed, continuous adoption and monitoring that it has been used by the entire team and slowly moving out of the manual processes or rapidly moving out of the manual processes depending on the scale of the organization. So like managing and thinking through the entire life cycle helps reduce risk, because the risk is not just platform risk. That is very small part of the risk if you're using a trusted vendor or a high quality technology provider. After that, it is about change management in the life cycle, then transformation, and then like leading the organization into the new regime. That is usually where a lot of companies face challenges, maybe even fail during this. So over there also there are certain recommendations, right? Like one which is, and we can talk more about it, but one is the cloud, which has fundamentally helped move capex to opex, which brings down risk from a PNL and a investment perspective, where the cloud is purely opex, and like it's not large upfront capex without proven results. So I think the risk can be brought down by using modern technology stack like the cloud, which is fantastic for enterprises making transitions and changes.
Noted your points. So, I mean, we are obviously discussing the future of compliance and trying to see, how we can reduce the burden on the CFOs or financial executives. So, obviously, we discussed partly, but This question is specifically about how to reduce that burden. So let me rephrase it like this. In the ever-changing and increasing regulations, okay, Archit, how can CFOs reduce the compliance burden? Because
Um,
at one side, the regulations are increasing day by day. If you look at the banking and the finance companies, there is one regulation which is coming almost every alternative from the RBI, right? And on the same side, if the listed company is there, there will be at least some regulation or notification from the Security Exchange Board of India, right? So the regulations are increasing day by day in order to make companies obviously far more meaningful and far more professional and transparent. So the question is, how can CFOs reduce their compliance burden?
Right, Amol, this is a great question, and the question we grapple with all the time, right? At ClearTax and Clear, as we are evolving, what we've seen is like a few things, right? Like there's a constant change and constant flux in regulation, right? Like, and everything is changing all the time because as a young country, we are also taking more risks and we want like things to be measured and managed. The second part is like the the operating teams usually don't have large budgets. Like in the compliance team is one of the least funded teams in the company because it's perceived as a cost center, and they're managing obviously tremendous amount of risk, but usually they're not the ones standing in line for revenue in terms of budgeting. They don't stand in the top 5 or top 10 in terms of budgeting, right? So with these factors combined, right, the right and the third thing which is also happening right now is the the Indian government and the way we are going, right? We are linking up various systems, right? And we are now starting to apply data sciences and artificial intelligence at the government side to like check for who's committing fraud, who's doing. I mean, you may have read like GST. There was invoice frauds and a lot of actions the government did and trying to figure out who's committing invoice fraud. The second part is more recently the government announced that the GST data, the income tax data, the Ministry of Corporate Affairs data, all of these data systems will speak to each other now. Earlier there were silos, so you could declare something to the GST officer, declare something to the tax department, income tax department, represent differently in the Ministry of Corporate Affairs, and then you can lead to like it can lead to misreporting, fraud, what have you, right? So these are the things that are changing, right? Like we are saying, like all of this needs to be digital. All of this will triangulate and speak to each other. And from a risk perspective, like a CFO really starts to think like leverage technology the right way, because otherwise it's very very difficult to keep up, because every day things are changing, every day the forms are changing, every day what reports you have to send are changing. The scope also keeps expanding, the government keeps asking for more and more information, right? Like they want like coverage of multiple elements of the business, and information is now being asked real time. That is another big change, right? Prior to 2020 in this country, there was no business information which was needed real time. Now with electronic invoicing and e-way bills, we are saying, hey, you need to submit everything real time. You need to decision payments real time. All of this driven by compliances. So it's a massive change. And the only way smart CFOs can keep up is by deploying technology behind this. And then they don't have to scale up their compliance teams, because that is a cost center which people are not willing to like go up on. And business needs to keep scaling. So our whole thesis is technological investments need to keep doubling in this space.
I think very valid point specifically on the real-time archive that you mentioned, because in my discussions, if I say specifically in last 3 months with the CFOs, because we at ETCFOs speak to a lot of CFOs, like we interview almost one CFO every day. And what I have been hearing from the CFOs is real-time budgeting, real-time data, because that's where, they can take their decisions very strongly and they can enact very powerfully, I think, so valid point on that front. And let me take last question here again, technology compliance and all including this. So what are the modern inventions in technology that a business can take advantage of it to ensure compliance?
Yeah, let me start with the most simple one. Like in my view, the first things CFOs and finance professionals need to do is leverage the cloud. The cloud is the nicest innovation from the company's perspective, where a total cost of ownership is lower. The capex, as I was describing, moves to operating expenditure, which capex moving to opex is fantastic, because if you're not upfront committing like a large sum of money to a vendor, and then you have risk of the project never going live, never seeing the light of day. With the cloud, you can invest every month. You can pay the technology provider a small amount of money, and if your teams are adopting, your teams are successful, then you continue with them. If you're not successful with them, or you don't like their services, you discontinue. You're not, there's no sunk cost of capex and deep capex, and the incentive alignment is very, very high. Typically in a capex style technology provider, right, which is the historical providers, like from the 90s and 20s, early 90s, early 2000s, the focus was, hey, how do we sell you this capex, this wide capex, and then I don't care whether the deployment goes live or not. But with the cloud providers, there's very, very deep incentive alignment that the thing goes live, because they get paid every month, right? So you have to go create value every month. So that's point number one. Second point is, now there's a lot of artificial intelligence and machine learning and data sciences that is coming through. That is fantastic, because what you're doing is, compliances are complex, ever changing, and to a degree, like many times grunt work, right? Because what are you doing? You're trying to make sure that a rule, specific rules which the government has provided, are being complied with, and humans may like lose focus, may not be aware of the rule change, or be trained, or what have you, or you have churn in your team, and the person has changed. And technology, artificial intelligence, machine learning, once the rule is deployed, is keeping up, and like every day, every hour, every minute, just following the rule engine, and making sure like the correct answer is happening, and the right things are happening. That is one example. Artificial intelligence and machine learning also helps in anomaly detection, fraud prevention, controls, a lot of things which a CFO has to think about in terms of what can go wrong in the org, what can go wrong in these kind of things, and bring those insights and data, as you mentioned, real time in front of them, so that they can do decisioning, or at least be aware of potential anomalies and risks and fraud. So these are a couple of examples. The other examples I can think of are certain applications in blockchain, which make the data and the audit trail completely tamper proof, so that the from a risk and governance perspective, they have a very, very clear audit trail, which is not tamperable. It is the blockchain technology provides tamper proof deployment, and that can provide a lot of comfort from a regulatory perspective, a lot of comfort from a risk perspective, a lot of comfort from an audit trail perspective. So these are three examples. I can think of a couple of more. The other revolution which is happening on the fintech side, which I briefly touched upon a few minutes ago. On the fintech side, because of this digitization on payments, UPI and other things, and GST invoicing and what have you, what you're seeing are digital trails left by companies, SMBs, business providers, and what have you. Now, fintechs and banks are collaborating and innovating on these things, and bringing new forms of payments, new forms of credit, new forms of communication, like let's say WhatsApp and what have you, to the front for efficiency and better working capital, better payments, better in, money out, and what have you, better management for CFOs and finance teams. So the technology really is in a moment of revolution, not just evolution. And it's so new, it's happening so fast and happening so differently, that most people aren't even aware. And now CFOs are starting to observe these changes, and COVID has really accelerated adoption of cloud, adoption of technology, and change in mindset in the C-suite office, where then the budgets are also available to take these projects on. So those are my observations on this topic.
Thank you, Archit, for your perspective. Ladies and gentlemen, to go beyond the typical CFO role, etcfo.com breaks down digital transformation in compliance for a robust, agile, and resilient future. Stay tuned to a special series, Future of Compliance, where we will explore various aspects of compliance with the top CFOs of India Inc. and industry experts throughout the next 3 months as part of this initiative. Stay tuned. Thank you so much.
Thank you, Amol. Thank you for having me.